They told us the 2008 financial crisis started with bad loans and greedy bankers. But what if I told you the real story was buried? On purpose. Behind the collapse were secret deals, hidden meetings, and quiet bailouts that reshaped the entire global economy. And here's the part no one talks about. Many of those same people, the ones who helped cause the crash, are still pulling the strings today. This wasn't just an accident. It was a plan. A web of power, banks, and government working hand in hand while ordinary people lost everything. In this video, we're uncovering the hidden scandal that shaped 2008 and how its shadow still controls your money, your savings, and your future. Stay with me, because by the end, you'll never look at the financial system the same way again. For most people, 2007 felt normal. The stock market was breaking records, banks were handing out home loans like candy, and the media called it a new golden age of prosperity. But beneath the surface, the system was already cracked, and no one wanted to admit it. Big banks across Wall Street had found a new kind of money machine. They packaged risky home loans into complex financial products, stamped them with fake AAA ratings, and sold them worldwide. On paper, it looked like genius. In reality, it was a ticking time bomb, a global pyramid built on bad debt. Here's what they didn't tell you. Those same banks were betting against the very products they were selling. They knew the house of cards would fall, and they wanted to profit when it did. The higher the market climbed, the more money they made from both sides. And as the profits exploded, so did the greed. Regulators looked the other way, credit agencies cashed their fees, and politicians promised economic stability. Behind closed doors, the warning signs were flashing red, but the people in charge decided to stay silent. The truth? The 2008 crash wasn't an accident of bad luck. It was engineered by those who understood exactly how to exploit a broken system, and when the collapse came, they were ready. This was just the beginning. The real scandal wasn't the fall. It was the cover-up that followed. When the financial world began to crumble in 2008, fear spread faster than the crash itself. Banks were collapsing overnight, credit markets froze, and millions watched their life savings evaporate. But while ordinary people panicked, the most powerful figures in finance and government gathered in private rooms, far from the cameras, to decide who would survive and who wouldn't. Behind those closed doors, deals were struck that changed the course of global finance. It wasn't about saving the economy, it was about saving themselves. The CEOs of the biggest banks sat shoulder to shoulder with U.S. Treasury officials and Federal Reserve leaders, drafting rescue packages that would quietly funnel billions in taxpayer money straight back into the same institutions that caused the collapse. They called it stabilization. In reality, it was a lifeline for the elite and a death sentence for everyone else. Small banks failed, families lost homes, businesses went bankrupt, yet Wall Street bonuses hit record highs within a year. The shocking part? Many of the bailout negotiations weren't even fully recorded or disclosed. Secret phone calls, emergency meetings at the New York Fed, midnight signatures. It was chaos disguised as control. And the same names kept reappearing. Goldman Sachs, JP Morgan, Citigroup. All interconnected, all protected. And here's the twist that most history books skip. The people who designed the bailout became richer and more powerful than ever before. The crisis didn't destroy Wall Street, it crowned it king. In the next chapter, we'll uncover how they used that power to rewrite the rules of global finance, rules that still control your money today. The 2008 crash didn't destroy the financial system, it exposed it. But instead of fixing what was broken, the people in charge rebuilt it in their own image. When the dust settled, the same banks that triggered the collapse were now even bigger, even richer, and even more powerful. Regulations meant to keep them in check were written by lobbyists, many of them former bankers themselves. And as the headlines faded, the cycle of risk quietly started again. Here's the part they don't want you to know. While millions were struggling to recover, Wall Street reinvented its money machine. Derivatives, shadow banking, offshore havens. The same tricks, repackaged with new names. The system didn't collapse, it evolved. Even the watchdogs, the rating agencies, the regulators, the policymakers became part of the game. They were supposed to protect the public, but instead, they protected the system. And who funded that system? The very institutions that benefited from keeping it alive. This is why the next crisis isn't a question of if, but when. The warning signs are here again. Soaring debt, inflated assets, and governments once more pretending everything's fine. In the next chapter, we'll uncover the real cost of these hidden rescues, How the 2008 deals still reach into your bank account, your mortgage, and your future today. The 2008 crash might feel like history, but you're still living in its shadow. Every grocery bill, every rent payment, every rise in your mortgage rate traces back to the quiet decisions made in those crisis meetings. When the government bailed out the banks, it didn't create money out of thin air. It borrowed it. Trillions in new debt flooded the economy, interest rates were slashed to zero, and central banks printed more money than ever before. For a while, it felt like a recovery. But that recovery came at a cost. Your cost. The rich, who owned assets, watched their wealth multiply. The rest of the world, the workers, the savers, were left chasing prices that never stopped rising. The gap between Wall Street and Main Street didn't just widen, it became a canyon. And even now, the same pattern repeats. When inflation spikes, when your currency buys less every year, when housing becomes unaffordable, you're paying the bill for a crisis you didn't cause. Here's the truth few want to face. 2008 didn't end. It just changed form. The money that vanished didn't disappear. It moved from the hands of millions into the pockets of a few. In the final chapter, we'll uncover what happens next and why the same system that caused 2008 might be setting up the next global crash right now. The truth is, the next crisis isn't coming. It's already here. It just hasn't been given a name yet. Every major collapse in history follows the same pattern: rising debt, inflated markets, political denial, and then silence, right before the fall. And right now, that silence feels familiar. Global debt has hit record highs. Central banks are trapped. If they raise interest rates, economies break. If they print more money, inflation explodes. The system that was patched together in 2008 is shaking again, and this time, there's no easy bailout left. But here's what's truly alarming. The same players are still in control. The same banks, the same funds, the same governments pretending everything is fine. Only this time, the stakes are higher and the bubble is global. Your savings, your pension, your home's value, they're all tied to a system built on borrowed confidence. And when that confidence cracks, everything else follows. So the real question isn't if it will happen, it's when. And when it does, history will repeat, just not the way we expect. If you've made it this far, you already see the pattern. This is Financial History Uncovered, where we expose the truths the world forgets, so you can be ready before the next collapse begins.